Hello, my name is Joseph. You can call me Jojo Techman. In today's video, we are going to learn the NPV, PI, and IRR function in Excel. These terms or formula or functions are used in the world of finance and accounting. So these are big metrics. They are big metrics used for capital budgeting, especially when you want to decide whether a project, investment, or business venture is worth your time and money. That's when this NPV, PI, and IRR comes into play. So I'll briefly explain what we are expected to do. For instance, we have 1 million naira and we want to invest it into a project, or you want to invest it into an investment or business venture. So you can't just start investing your money without knowing whether the investment worth your time and money. So you have to calculate the total present value of cash inflows to the net present value of this project, the profitability index, and IRR, which is the internal rate of return. So this present value of cash inflow simply means the future money for year one to year five. This is the future money we are expected to gain if we invest our 1 million naira. This 1 million naira, if we invest this 1 million naira in a project, maybe a land project or whatsoever project, if we invest this 1 million naira, so what is the future what is the today's value of this future cash inflows from 400,000 to 1.2 million naira? We want to convert this future money to today's value. So this is the formula we are going to use. Equals NPV. Since we are discounting it, NPV, so we are going to use this discount rate for it now, comma, then the future money. Remember, we are converting the future money to today's value. So we are going to start from year one, from this 100,000 to 1.2 million naira. So you highlight them, select them. Once you select them, you close your bracket and press enter. So this now tell you that this money now, from this 400,000 to 1.2 million, that the current or today's value of this future money, future cash inflow is 2,353,875 naira 48 kobo. This is the current value of the future cash inflow. So we are done with the first task, which is to calculate the total present value of cash inflows. We are now moving into the net present value. So our net present value, this is the measure value added to this money. This is what our net present value is. It shows how much an investment adds. How much does your investment add today after subtracting the initial cost? So we are going to subtract this 1 million naira from the cash flow with the discount rate. So the formula is equals NPV. The rate is 10%. Then the cash inflows, you close your bracket. So we are going to subtract this 1 million naira that we want to invest from here. So you you enter your additional sign. Why we are entering this additional sign is because already this money is in parenthesis, which means it is negative. We are going to subtract it. That's why we are entering this additional sign to obey the rules of mathematics. So once you enter this subtraction sign, you now select it. Select your initial investment, which is 1 million naira, and press enter. So this is the value added after subtracting your cash inflow from the initial investment with the discount rate. So we are to calculate the profitability index. Then for profitability index, this simply means the measure value per unit invested. How much value will you get for every 1 unit of money invested? So it is a ratio, not profit. We want to know the value that we get for this investment. And the formula is equals F16, which is our total present value. Our total present value divided by this initial investment. So since this initial investment is in negative, there is a minus here, this bracket. So we are going to convert this negative number to positive for us to get our profitability index. So we do that using ABS function in Excel. So you open your bracket, ABS, then F6, you close the parenthesis and press enter. So this now becomes our profitability index. Then for IRR, which is internal rate of return, this measures the percentage return. So instead of asking how much will you make, so this IRR now asks what percentage return is this 1 million naira project generating. You want to know the percentage return that this 1 million naira is generating. And we are going to do that using this formula equals IRR, then F6 to F11. IRR F6 to F11. So from your initial investment to the last cash inflow for year 5. So you close your bracket and press enter.